Well, shares of Academy Sports is rising for the second straight day after that company's earnings came out and beat estimates. It saw record quarterly sales as well in the first quarter, sales up 39%. And I want to bring in the CEO of Academy Sports and Outdoors right now. That is Ken Hicks. Ken, it's good to see you. Talk to us about what you're seeing sell right now. Whether this is reflection of reopening trade, what other trends are driving some of the sales that you're seeing, and what things are particularly popular?
Well, we were open throughout the pandemic, and Texas and our markets have been open. So we've seen people come in and pick up new hobbies and interests like fishing, camping, hiking. And so that has continued. That's one of the things that's been very good, is that people picked up a new hobby and they're doing more of it. We also are seeing people going back to some of the things like team sports. Baseball was very good this year. So was biking. And we're seeing things, people get back into outdoor cooking as they begin to get together and gather. So it's people picking up new interest and people going back doing old things. And some of the things that are selling well are tents. We're going through tents like crazy because people are going out camping this year as a way to stay safe, but also have some fun outdoors.
Ken, Brian here. You mentioned on the earnings call this week, you are about $100 million short in terms of inventory relative to where you would like to be. Where are you seeing some of those shortages and what's causing it?
Well, part of it is the supply chain. It's extremely stressed. Deliveries are slow, and production is not, in some areas, is not all the way back to where it was. So some of the outdoor areas, we've got some inventory issues. Bicycles is a place where we don't have as much stock as we like. And some of the fishing, some of the team sports areas. But overall, our inventory is what I call acceptable. It's just not where we would like it to be for being in stock so we can serve every customer, and we've got the presentation we'd like.
And, Ken, thinking about those inventory, type challenges that you guys have had, how much have you learned about the business maybe in terms of levels that might be better going forward? Or are you all hoping to, maybe get through this, unprecedented couple of year period and have the stores, the assortment and the mix kind of look like it did pre-pandemic?
One of the things that we learned is we can operate with less inventory. And we're working on a major supply chain initiative to improve it because we can turn inventory a lot faster. We turned our inventory prior to the pandemic a little bit under 3. Last year, we turned it 4 times. So 4 times probably a little too fast, but we know we can turn the inventory quicker and be more responsive to the customer by faster supply chain, but also better allocation, getting the right inventory in the right store in the right quantity.
Ken, wages are going up pretty sizably in retail and restaurants. You have Walmart, I think, is a $15 hour minimum wage now. Amazon, you work in one of their DCs and pulling over $20 an hour. What type of pressure is that putting on your business?
We're seeing more challenges in getting people. Fortunately, in our stores, we're able to stay staffed, but we have taken our wages up. We continue to offer a competitive wage, but I also think that we offer a different environment, and selling fun, which is what we do sell, is enjoyable, but also we're working with our team members so that they have more flexibility in their scheduling.
So, Ken, you talked about inventory giving you guys more flexibility on margins and these rising wages. Have you guys raised your prices? And if so, by how much?
We have unfortunately had to raise some of the prices due to cost, but overall, we've tried to hold key price points and also hold our price to a very, very strong value level. We're known as a value retailer, and we're still below most of the market. But in some areas, bicycles is one because of duties and materials where prices have gone up. But we make sure we still have a $49.99 kids bike and a $99 adult bike.
Ken, quickly before we let you go, KKR still has a 31% stake in your business.
Yeah.
Is there any insight into how long they plan to hold that?
That's their decision. Hopefully, they're happy with what's happened with the stock. So the longer they hold it, the more money they make.
Fair answer. Ken Hicks, great to see you as always. Chairman, President, and CEO of Academy Sports and Outdoors. We'll catch up with you again soon.
Casey's General Store is out with much better than expected quarterly results as shoppers ventured out of quarantine and into the company's stores. The 2,200 store plus chain has also been shopping for acquisitions lately as it seeks to bulk up its business. Joining us now is Casey's General Store CEO, Darren Rebelez. Darren, good to see you as always. You make a big chunk of your business in selling, or at least you did pre-pandemic, pizza slices, donuts, and other bakery items. What have those businesses been up to as the economic recovery from the pandemic continues?
Hey, Brian, good to see you again, and thanks for having me this morning. First, I'd like to say that we just wrapped up a fantastic year from an earnings perspective and a growth perspective, set a record for earnings per share, up 18% from the prior year, set a record for EBITDA growth, and none of that could have been possible with our over 40,000 team members who are working really hard in our stores every day to deliver on that great guest expectation that our guests have of us. Now, with respect to the food business, we really had a challenge at the onset of the pandemic with a lot of self-service food being shut down early on, and that gradually recovered as we moved through the pandemic. One of the things that really was a bright spot for us was our whole pizza business. And a lot of people probably don't recognize this fact. We're the fifth largest pizza chain in the U.S., and we saw that whole pizza pie business really accelerate during the COVID environment, in part because it's just great product, and we've been known for that for a long time. And in another respect, it was due in large part to the digital emphasis that we put on the business. We launched our rewards program a little bit over a year ago, right before the pandemic. We have over 3.6 million members now, and that really gave us a platform to activate those guests and be able to connect with them in a more meaningful way and really drive that business. So we saw double-digit growth in that business. The morning day part that you referenced with bakery and coffee and that sort of thing is recovering now as we cycle through and see the economy begin to reopen again.
Hey, Darren, it's Julie here. Well, as you guys are fueling people up with pizza and coffee, you're fueling up their cars also. And I wanted to ask about the fuel business because you guys, the margins are under pressure a little bit there as we see higher gasoline prices. Talk to me about that business and also what you expect in terms of demand from drivers as the prices trend higher.
Yeah, Julie, we've certainly were under pressure from a demand standpoint throughout the year. That demand is beginning to recover. We are seeing commuters start to gradually come back to work. And we had some positive growth in the fourth quarter from a fuel perspective. We're continuing to see that moving into the first quarter of our fiscal year. But one thing that the industry has proven really resilient about is balancing the volume and margins to be able to offset some of that demand destruction that we saw early on. And so we've experienced outsized margins. We have a fantastic fuel team, both on the pricing side and the procurement side, that has really allowed us to differentiate our results from competitors we see in our geography. And so we've actually had one of the best years for fuel profitability that we've ever had, based on that ability to execute and procure fuel more effectively.
Darren, we were just talking earlier on in the show about Chipotle raising its prices in response to a tighter labor market, where it also had to raise its wages. And I'd ask you about what you guys are seeing on the labor side and competition for getting team members, retaining team members, and how that's fed through the income statement so far.
Yeah, Myles, that's a great question. I think there's been a lot of press around the labor shortage and the challenges of labor, and we're certainly not immune to that. We've had our opportunities to try to hire more people, and wage rates are going up. And let's face it, those costs have to go somewhere. And ultimately, I think the consumer is going to bear the brunt of that. In our business, we're fortunate that we have a lot of different levers because we're really in three different businesses. We're in the fuel business, we're in the grocery kind of convenience item business, and we're in the prepared foods business. And so there's a lot of different places that we can offset those wage pressures, but we're certainly seeing them. We've had a national hiring event where we were able to close some of the gap from a hiring perspective. We're still working on that. I think also one of the things that will probably relieve a little bit of that pressure is in about 10 of the 16 states we operate in, those states are going to discontinue the incremental unemployment benefits that the government has been providing. So we think that will start to make more people available and come back to the workforce, and we think that'll help out the situation as well.
Darren, if I'm correct, that hiring event you mentioned, you were looking to hire 5,000 people. Were you able to hit that number?
No, we were just shy of that. We hired about 4,100 people during that event. So not all the way to where we expected, but certainly took a big step forward in the right direction. And we're planning on having some additional events as these unemployment benefits start to roll off. We'll have different, more localized events, and we're confident we'll be able to close that gap.
And lastly, Darren, one thing that caught my attention, one of your competitors, although smaller, Sheets, is now going to start accepting Bitcoin very soon. Is that something you plan to do?
No, we really haven't had any discussions about getting into the Bitcoin business. We don't think that that's a real driver of demand for us, particularly in our geography. And so we offer all forms of other payments and electronic payments and frictionless payments. So we think we're where the guest is right now and providing those payment options, but we don't see Bitcoin, at least in the immediate future.
Not wrong with that. Cash is king. We'll leave it there. Casey's General Store CEO, Darren Rebelez, always good to see you. Have a good rest of the week.
All right, well, reports yesterday that Republicans and the White House reaching an impasse on talks around an infrastructure package, but certainly a lot of optimism does remain in both the public and the private sector for an increase in investment in infrastructure here in the U.S. And joining us now to talk about how the private sector is taking these developments and areas that they'd like to see invested in is Sadek Wahba, founder, chairman, and managing partner at I Squared Capital. Sadek, thanks so much for joining the program this morning. Let's just start with, from your vantage point, whether that news yesterday puts an end to hopes around infrastructure and sort of how you guys are thinking about, today, the likelihood of something getting through, the U.S. Congress over the next, let's say, couple of months.
Myles, great to be with you. Like you said, I think it's good news in the sense that they're both talking to each other. President Biden is at 1.7 trillion. If you look at the problem-solving caucus, they're at about 1.2 trillion. So the gap between the two has shrunk, and I think there is hope for a bill that will be anywhere between 1.2 to 1.7 trillion. That's the good news. The bad news is that they haven't agreed on how to fund it. Republicans insist that they will not support a corporate tax increase. Democrats insist that they are only going to use a corporate tax increase to fund that program. So that, of course, is a real issue if they're not able to fund that infrastructure bill. And then the second concern is that whether it's 1.2 or 1.7, the fact is it's not sufficient for our infrastructure needs today, and certainly for the 21st century. We need to invest much more in infrastructure. We need to invest probably 2.3 trillion just to keep our infrastructure running. And we need to double that at least.
Well, Sadek, that's where you come in terms of public-private investment. You're on the private side of the investment equation. We've seen, of course, in the public markets, a lot of people invest in companies that are caught up in infrastructure and hoping for some sort of bill to pass. What's the status of projects right now? Are things sort of waiting for this bill to pass? Or how can you invest when that's sort of hanging over you, I guess?
Yeah, Julie, it's a very good point. The problem is this. I'll give you a simple example. You can buy a listed company. You can buy shares on a listed company that focuses on airports, that focuses on toll roads in Europe, in Canada, in Australia, but not in the US. We simply do not have that kind of public-private partnerships. So we have an antiquated funding infrastructure system, which simply does not work anymore. What's sad is that neither the Republicans nor the Democrats have mentioned once, as far as I know, the word private sector. And that, in America, does not make sense. So we need to encourage the private sector to invest in all of these new projects. So, for example, bring in public and private pension funds to invest the assets that they have under management in long-term infrastructure projects. Encourage households, US households, to invest in infrastructure. So I've proposed in the past the creation, for example, of an infrastructure IRA. We have 30 million IRA accounts. $10,000 per account, we can generate $300 billion a year. So that's another mechanism to do it. And a third one is create an infrastructure bank. A bank, if you take $100 billion from the money we're looking to appropriate in the coming weeks, add that, leverage it, and you can generate $1 trillion of investments in infrastructure over the coming decades. So the truth is, the private sector can play a huge role, but the government has to understand, both houses and the administration, that they're ready and able to do that.
Given the uncertainty around any plan, how are you investing in infrastructure right now?
A lot of the investments that the private sector is doing, of course, is in areas which are mostly deregulated. So the energy sector, transmission, distribution, renewables, all of these areas have received a lot of attention. Unfortunately, toll roads, if you think about it, most of the transport infrastructure, 95%, is owned by states, municipalities. And you know how many of them we have? Over 50,000 agencies that manage our transport infrastructure. So in those sectors, it's very difficult for the private sector to get involved unless they operate on the construction side through subcontracting with municipalities.
So, Sadek, two related questions. One, in the US, where do you think the most acute need is when it comes to infrastructure? And two, where do you think the most profitable opportunity could potentially be for you or for people like you?
The fact is, the Biden plan recognizes the need for infrastructure across the board. So think of, for example, water. We have had people, unfortunately, die because we did not have healthy water to drink. So investing in the water sector so that we have clean water for our children is an absolute necessity. Safe roads and bridges. Again, you have hundreds of billions of dollars that can be invested in those areas. And more recently, with the kind of cyber attack that you have, development of operational technology, OT, not IT. So OT cybersecurity protection is critical. And so you're going to see a lot of investment in those areas in the years to come. So all of these are sectors that people can invest in where you can make attractive, I would say, long-term profits, steady long-term profits, which is more than what the bond would give you, but less than what an equity return would give you. It's in between because you have 20 to 30-year stable, predictable cash flows.
All right, Sadek Wahba, founder, chairman, managing partner at I Squared Capital. Sadek, thank you so much for taking some time to talk with us about the state of infrastructure investing. Hope to stay in touch.
Pleasure to be here. Thank you.
A new survey out from Goldman Sachs reveals that small business owners are starting to see a recovery, but they still face three major challenges, including hiring, inflation, and access to capital to talk more about that survey. We are joined by Joe Wall, Goldman Sachs 10,000 Small Business Voices National Director, as well as Jill Bommarito. She's Ethel's baking company owner and CEO. She's also a member of the Goldman Sachs 10,000 Small Business Voices National Leadership Council. Good to have both of you on today. Joe, let me start with you because this is an interesting survey at a time when we're talking so much about the challenges businesses face overall, especially in hiring. You're focusing on small businesses, but walk me through what it is that you found, and what that suggests in terms of how quickly the recovery is likely to play out.
Sure, and thank you for having us on this afternoon. We actually have been doing surveys every 6 or 7 weeks, dating back to last March. So this is actually our 9th survey since sort of the onset of COVID. So the data that we released earlier today, shows a few things. Number one, small businesses are incredibly resilient, and I think are generally optimistic about the direction of the country. About 2/3 of businesses say they think the U.S. is on the right track in terms of just the upward trajectory, and part of that is obviously just reflected in life coming back to normal to a great extent, which I think everyone is happy about. In terms of where we're seeing 3 roadblocks that you outlined, first, when it comes to hiring, the good news is 71% of the small businesses say they are trying to hire full-time and part-time employees. However, 81% say they are having a difficult time trying to fill their openings. And then when it comes to the inflation issue, we found that 83% of small businesses that we surveyed have seen an increase in their operating costs in just the past few months. And 82% say they are very worried about the inflation dynamics that they're seeing in real time on their own business books. So far, about half of small businesses have raised their own prices of the goods that they're selling, but that number is obviously going to increase as time goes on and their operating costs increase. And then finally, on access to capital, which I think is a significant issue now that the PPP program is coming to an end, we found that 82% of small businesses that received a second PPP loan say they will exhaust their funding by the end of July, and only a quarter of them, 24%, say that they are very confident that they're going to be able to maintain payroll. One, significant issue that is tied to that is that the natural segue for small businesses now with PPP coming to a close is that there's obviously a suite of SBA loan products available to them at a relatively low interest rate. However, if you had a bad financial statement last year, which most businesses did, you are not going to be able to access those SBA loans just because of the underwriting requirements. And so that's a significant problem, and one that the small business owners, 93%, just about every one of them, thinks that the SBA needs to reevaluate those loan terms in order to give a lot more small businesses access to the necessary capital, whether it's to help them to recover from COVID or for them to expand like Jill wants to do with her business.
Jill, how have you seen some of those roadblocks that Joe just highlighted play out with your business? If we're talking specifically about operating costs, how much of an increase have you seen?
It's a great question, and thank you, Akiko. It's across the board for us. So everything from raw materials to our packaging supplies, our logistics. We've had increases from almost every single supplier. And a typical increase would be a 1%, a 2%, 4% maximum. However, we're seeing 11%, 13%, 14%. And that's on top of wages. We're paying more for labor today. We've increased our health benefits. So we haven't increased our price yet, but it feels, fairly inevitable.
I mean, how much runway do you have until you get there?
We're working so hard on efficiencies. I'd say we have to reevaluate this in 3 months and take a look at it there. Thank goodness we have amazing partners on both sides.
And Jill, on the issue of hiring, this is a challenge that we've heard from businesses across the board. What are you finding? What do you think is maybe keeping employees at bay? Or as you try to hire, what are you hearing from those who are saying, look, this is what it's going to take for me to come back?
Absolutely. So we're hiring across the board from a vice president of sales. We're recruiting for that right now to an engineer, a mechanical engineer for our facility, as well as our production and packaging team members. The labor pool is just smaller. It's just smaller. And then on top of that, any positions that are under, basically a $40,000 a year salary, there's incentives, it feels, to not necessarily be participating in the labor force right now. And we've had some challenges, at least that's the perception out there. And then keeping them, there's always another great opportunity, what's around the corner. Just know that we're an employer that always has paid at the top of the pay scale. We have great benefits for the company that we are and all of our competitors. So we've always seen ourselves as a leader, and we're struggling.
Joe, you talked about the challenges a lot of these businesses face with access to capital. And I think you bring up a good point about the SBA loans, especially on the back of what has been an incredibly challenging year for some of these small businesses. And I'm thinking back to the conversations from a year ago where there were dire forecasts of just how many small businesses would actually survive. As you look at the reality right now, what does that outlook look like for you?
Well, I think there's no doubt, and Jill can attest that the PPP program, not only the first installment but the second installment, saved a significant number of small businesses. I don't think there's been an accurate probably estimate to date, but the injection of capital at those moments in time, there's no doubt kept a lot of businesses afloat and kept obviously a lot of their employees and their communities afloat. We often forget that, small businesses are at the epicenter of all of our local communities, and, beyond keeping their doors open, they keep a lot of families going as well. And so I think, to be honest, this is, I mentioned before, our 9th survey. This is the first one where it feels like people are, definitely adjusting their framework towards a more positive outlook. But at the same token, and I think this is very important, while things are definitely feeling better, the road to recovery we still got a ways to go in terms of getting fully back up on our feet. And I think, Jill can speak to that, but in terms of, their ability, as Jill has outlined, to, hire up both full-time and part-time employees, to keep their costs down, to keep, obviously, in order to keep the costs off of the consumers. These are significant challenges they're facing. And I think and when it comes to access to capital, that's a big problem that I think hopefully policymakers addressed in the near term, because I think there is going to be a drought of capital as we approach the late summer.
Jill, you agree with that sentiment? As you look down the line, how have you kind of had to adjust your operations beyond looking at potential price increases? How have you had to sort of change your outlook given the challenging environment?
Yeah, no, that's a great question. And to be really transparent, we are a really fortunate company. We're growing. We're up over 200% over last year. So we are a company that you think everyone should be wanting to allow access to capital for growth and things like that. But some of the parameters that are out there can make it challenging for small businesses in general. And so when I speak to this, I'm really speaking for everybody in that small business community, the challenges that they're facing. We'll continue to be nimble and be able to pivot. I mean, that's so important in this process. And we're looking at always product mix. Are there changes that we can make without ever compromising what we do? But most important is us all coming together as small businesses to be able to help raise the awareness that we're recovering. We're so thankful, but we have a long way to go as a small business community with our economy.
Yeah, it's a good point and good insight, especially coming from you, Jill, as an owner of a small business. Our thanks to Jill Bommarito, Ethel's Baking Company owner, as well as Joe Wall with Goldman Sachs. Well, First Solar today making a big announcement that it's investing $680 million to expand its manufacturing capacity with solar panels there. The company says it intends to use some of those funds to construct its third U.S. manufacturing facility in Ohio. Let's bring in the CEO of First Solar, Mark Widmer. Mark, this is certainly a big investment that you've announced at a time when there's a larger conversation happening about reducing the U.S. reliance on Chinese parts and components to build out the solar industry here. Walk me through the specifics of this $680 million investment.
Yeah, thank you. So we made an announcement today to expand our facilities here in Ohio. So we've had two factories. Our most recent factory was actually put into production a couple of years ago. At that point in time, we actually had acquired more land with a view of expanding capacity. We put it on hold at that point in time to readdress and to sort of assess how do we not just replicate what we already have in our new factory, but how do we move it forward to a factory of the future, to the next gen product. And so we've made that decision now. As you indicated, it's about $680 million investment for a 3.3 gigawatt factory. It'll more than double the capacity that we have here in Ohio. So we'll have about 6 gigawatts of total capacity when the factory comes online in 2023. And again, it'll be a next gen product. It'll be higher efficiency than we have today. It'll have a different form factor. It will enable a lower cost profile as well. So we're very excited to be able to make this announcement and to continue to support, our primary market here in the U.S. and meet the needs of our end customers, which have given us a tremendous amount of confidence given our backlog that we've been able to contract with our customers, which is at an all-time high. This capacity aligns to best meet the needs of our customers and to fulfill the backlog that we already have contracted.
Mark, when you look at the solar industry as a whole, though, still a significant amount of sort of parts and components. The overall supply chain rests over in China. We're talking about just over 80% in imports. What does today's announcement do in at least moving the needle towards more U.S. manufacturing? And what have the conversations with the Biden administration been like for you?
Yeah, so first off, in terms of what does it do for the industry? First off, we're the only company of any size and scale that has been able to be a pioneer when the industry first started, to also be a dominant or primary player in the market as it exists today. We do not have a crystalline silicon semiconductor. We have a thin film semiconductor. So we are not reliant at all on the Chinese supply chain. So the entire portion of the Chinese supply chain does not create any dependency for us in our technology. And what that also means is we have no dependency on anything from China as it relates to our new factory that we'll be putting here in the U.S. So it allows us as a company, and even allows the U.S. as they think through their long-term energy independence and security strategy, to decouple from any dependency on China and do that with a technology that's not only proven itself as the technology today, but also enables the technology of next-gen PV as it'll evolve as we move forward. As it relates to the conversations that we've had with the administration and members of Congress, it's been very constructive. I mean, there's nothing more that, in terms of enabling more U.S. manufacturing, enabling more U.S. capacity to address long-term climate change goals, again, to align to a vision of long-term energy independence and security. So with this capacity we'll have about 6 gigawatts of production here in the U.S. If you look across the balance of the competition or the capability here in the U.S., there'll be about 11 gigawatts of capacity here in the U.S., which is still a little bit less than 50% of the market. But as we indicated in our announcement as well, is we're more than able and willing, given the right policy backdrop and commitments, to expand beyond where we are right now. We've put 3.3 gigawatts in the discussion right now. We can easily double that beyond where we are right now and get that into production within the next couple of years, assuming the right industrial policies as well.
If we're talking about those policies, of course, it is more of a long-term project here, but I know you have really pushed for this manufacturing tax credit for the industry. To what extent do you think that those incentives need to be in place to really propel the momentum here in the U.S. in the solar industry and manufacturing back at home?
Yeah, look, I think they need to, first off, let's step back in terms of why is there a need for policy, whether it's an industrial policy or it could even be the use of tariffs that, have been imposed in over the last decade or so. All we want to make sure is that not only for First Solar, but for others, that when they come into this industry and make an investment, a significant commitment to capital, that they have not only fair trade, but free trade, obviously. But the most important component is how do we ensure that it's fair? And so we have to have a mechanism that creates that level playing field. And we believe in industrial policy, I think, is a better enablement of ensuring that level playing field, which will enable those cycles of innovation and the commitment to capital. We know that the technology is going to have to continue to evolve. And we want companies to continue to invest. We also know that companies to be motivated to make those types of investments and to provide returns to their shareholders is they have to have the capability to compete and compete on their own merits and not be disadvantaged because of another country's desire to dominate a particular industry and heavily subsidize it and then create challenges for any new company to scale up and to compete. We think that the manufacturing tax credit enables that level playing field that will then create the cycles of innovation that will then allow for the next gen evolution of PV, which needs to happen to continue to move this industry forward.
And Mark, really quickly, what does the demand picture look like for you right now? Certainly, we've spoken over the last few months about the momentum that you've been seeing in renewables overall as we look to this administration really pushing this transition to green energy. What kind of pickup have you seen?
We've seen significant pickup, right? And I think with the support around the climate change goals and really not only from utilities embracing solar as lowest cost new generation, as well as large multinational companies that are making commitments to 100% renewable energy. There's been a pretty significant inflection point in demand near term, and as we see it across the next several years, especially with at least the current commitments that have moved towards extending the ITC and the PTC, which gives people a longer runway of understanding of what's in front of them in terms of the investment tax credit and the durability of that. So the demand has been stronger than it ever has been. Like I said, we're sitting right now with a record backlog, and we're continuing to see very strong engagement and interaction with our customers. And with the new factory, I think that'll only accelerate.
First Solar CEO Mark Widmer, it's good to talk to you again. Appreciate the time. Less than 2 months to go until the opening ceremonies for the Tokyo Summer Games. Still a lot of questions, though, about exactly how it will be held safely, especially given that Japan is still in a state of emergency because of the pandemic. Let's bring in Ryan Murphy. He is 3-time Olympic gold medalist. And Ryan, we're talking about whether the Olympics are going to go forward or not. You're headed off to the Olympic trials, so certainly your mindset is to compete in the games. How are you feeling right now as an athlete about all of the chatter around how exactly this is going to be conducted or whether, in fact, the Olympics are going to be held?
Yeah, so I think from my perspective, as I'm getting ready for Olympic trials here in this next week, my focus is purely on that. I'm trying to be top 2 in my events to qualify for the U.S. Olympic team, and then after that, I'll really turn my focus to Tokyo and trying to be ready for that. As we get ready for it, I know there's going to be a lot of safety protocols, and I know that's an ever evolving list of things that we're going to have to do in order to ensure that the games do go on safely.
There's still a lot of details on that front in terms of safety protocols that need to be filled out. As an athlete that's looking to compete in the games, how comfortable are you with what has been laid out so far? And then the uncertainty about what exactly will be asked of you beyond the competitions?
Yeah, in terms of what's been laid out so far, I do feel comfortable. And really my focus has been on the USA team. And I know the majority of the USA athletes are vaccinated and are taking the precautions necessary in order to not spread the virus if and when we do go to Japan. So I do feel comfortable on that. And I know that the IOC is enlisting the top doctors in the world to help them come up with protocols in order to ensure that the games do go off safely.
You're already dealing with a 1-year delay, given the Olympics were supposed to be held last year. And now we're less than 2 months out. There's questions around whether, in fact, the competition is going to move forward. How has that affected your mindset in terms of how you want to focus, how you want to pace yourself going into the games?
Yeah, so I think from my perspective, one of the things that I always live by is you have to know what you don't know. From my perspective, I know that I can read everything I want to about coronavirus, but at the end of the day, I'm going to follow the doctor's advice. And I know the IOC enlisting the best doctors in the world. So I'm going to follow that advice and really just keep my focus of what I'm really good at. And what I'm really good at is getting into the pool, trying to swim really fast and trying to win some medals for my country.
Away from the games, Ryan, we're talking to you, of course, because you've got this partnership with Lilly, under Team Lilly, as the first Team USA pharmaceutical sponsor, specifically addressing the issue of migraines. Talk to me about how this partnership came about.
Yeah, so I'm someone that has dealt with migraine throughout my life, and I think it's just really important to spread awareness around migraine and just let people know that there's options out there. I'm really proud to partner with a brand like Lilly, who's doing so much work to try to help people reach their potential. I'm really passionate about people reaching their potential, and so it's been really fun to partner with Lilly to help people to do so.
And what's the message here that you want to get out through this partnership in terms of raising awareness?
Yeah, so I'm someone that has dealt with migraine, and I think that I've been able to achieve a lot of the things, most of the things that I've set out to do. So I want people to know that no matter what your health condition is, in a lot of cases, Eli Lilly has medications to help you with that and to help you reach your goals and dreams.
Ryan Murphy, three-time Olympic gold medalist. It's good to talk to you. Wish you the best of luck. Let's keep our fingers crossed. The Olympics, certainly as an athlete, I know you're hoping that moves forward. So good to talk to you and appreciate your time today.
Welcome back. Let's turn now to the latest in the coronavirus pandemic as the United States tries to get more adults vaccinated. We're joined now by Dr. Stephen Corwin, New York Presbyterian Hospital's CEO. So, Doctor, we were all talking this morning about vaccine hesitancy. So I wanted to start with some myth busting about the coronavirus vaccine. Sure. Two questions here. One, because I think this is the one I've heard quite a bit. Can these vaccines at all cause infertility? Are there any concerns that they could potentially cause infertility? And two, if you had the coronavirus, do you still need to get vaccinated, or does that immunity or the antibodies that you got after fighting off the virus last essentially forever?
Great questions. The first answer is clearly no. Your fertility is not going to be affected in any way, shape, or form. There's absolutely no evidence to suggest that. So for those couples and people that are thinking about having children, I would not worry about that one bit. The second question is an interesting one, which is that, yes, you may have some immunity depending on the severity of the illness and how much antibody response you generated. But it is not as effective in terms of immunity as the vaccine. So the recommendation that we have, that CDC has, is you should get vaccinated anyway. It's more protective of you and for you for the long haul. Those are two important questions. Thanks.
Dr. Corwin, I don't know if you saw news that a hospital in Houston has actually suspended about 200 of its employees without pay for 2 weeks because they refused to get the vaccine. We're seeing some people in the medical community not wanting to get the vaccine, and I'm wondering what you're seeing within your own hospital network and from your own staff.
Same thing, and we're seriously considering mandating the vaccine. We're a healthcare institution. Our first responsibility is to protect our patients and then to protect our staff. And so we've spent a huge amount of time educating our staff, making sure that they understand all the issues with the vaccine, that people don't feel that they're being experimented upon, that the vaccine is safe, that there are reasons to get the vaccine and protection of the vaccine. But ultimately, we want any patient coming into our institution to feel that they're going to be safe. And that means that our employees have to be vaccinated.
You know, I for one, when I hear folks in the medical community say that they are hesitant to get the vaccine, it sort of makes me wonder, and I take pause, although I have gotten both of my doses of Pfizer and I am fully vaccinated. Are you concerned that lay people will hear that the medical professionals don't want the vaccine, it'll start feeding off itself?
Yeah, I think you have two concerns. The first concern, the most important one is, do you want to go into a hospital where you're not sure your medical care provider, the security guard, the environmental service worker has not been vaccinated? By definition, you're sick if you're in the hospital. And to a certain extent, you're immunocompromised. So I think that you want that assurance. And then secondly, as you said, well, if my doctor's not getting it, why should I get it? Or if my nurse didn't get it, why should I get it? So, and it's really important, Alexis, to remember, we're still not over this thing. We're a lot better off. The economy is coming back, as you've noted. People are talking about travel coming back, business travel. There are bookings all around the country. But we've got to get to more people vaccinated to continue to propel us forward economically and for people to feel safe. And we have to go through another fall and winter. This is not the time to let the foot off the pedal. We've got to double down on getting everybody vaccinated. I'm sure you felt a great sense of relief when you got your vaccines. I felt the same sense of relief. My family has. I have convinced many people who were hesitant to get the vaccine, who felt that sense of relief and the feeling of, gee, I can get back to a more normal life now. That's what we want. That's what we want as a country.
So I'm curious to know what our reality, truly looks like if we don't reach some of those levels that the Biden administration has put forth. Right now, it is that 70% by July 4th. But if we don't hit some of those target numbers, what does our new normal look like? Is it, a constant separation of vaccinated and unvaccinated people? Is it the fact that we're just going to all have to keep wearing our masks into perpetuity? I mean, what is it really going to look like, this time next year, for example?
Well, I'm a big sports fan. I'd like to know that if I got into a stadium with 50,000 people or 60,000 people, that the vast majority of them were vaccinated. So to your point, yes, we want to get more people vaccinated. It varies state by state. I realize there is some discussion over, this may be incurring on my individual liberty. But the public health of the country, I think, is critically important. And getting back to normal requires people to be vaccinated. The flu pandemic of 1919 lasted for a period of a few years with bumps, with recurrences. I would be surprised if we didn't have some recurrence of this in the fall, and it'll be mitigated substantially if we're all vaccinated. The more we get out, the more we go to restaurants, the more we go to indoor entertainment venues, whether it's the theater or the movies, et cetera, that you want the people sitting next to you to be vaccinated, because it just increases the chance of transmission if they're not. So if America wants to get back to a real normal, you got to hit that 70% plus threshold to get us back to feeling like, hey, I don't have to wear my mask all the time. I can go to a restaurant and not worry about getting COVID. I can visit my family. I can have a normal Thanksgiving. I can have a normal Christmas. You're 100% right. That's exactly what this is about.
And, just a few minutes ago, the Biden administration made an announcement saying they're going to buy up 500 million Pfizer coronavirus vaccine doses to donate to the world. How far do you think that's going to go? I mean, it sounds like a big number, but how far is that really going to go in getting the world vaccinated so we can all, because we are so all interconnected, so we can all get back to normal?
Well, it's a start, and clearly is a big start. I think the president said very early on, I want to make sure America's getting vaccinated, but it's a worldwide pandemic. You see now with the Delta variant, or the variant in India that is now in the UK, the world has to get over this pandemic. Otherwise, we're going to have these recurrences, Alexis. So I think it's a very good gesture, but I think we're going to be talking getting vaccine doses in the billions. I'm not quite sure how effective the Sinopharm vaccine has been. We're not sure how effective the Sputnik vaccine has been. But we sure as shooting know that the Moderna, the Pfizer, the J&J vaccines are effective, and I think that we should be clearly in the process of giving them to the world. I don't agree on the waiving of the intellectual property protections. I think there's a better way to do that. I think it would be counterproductive to waive the intellectual property protections in terms of the development of the vaccine. And I know that that's been talked about as well.
All right, Dr. Stephen Corwin, CEO of New York Presbyterian Hospital. Thanks so much.
And I love seeing you without your mask on. So thank you so much.
We love not having to wear our masks anymore.
Exactly. Thank you, guys.